Good afternoon, this is Roger Guy of Chapter7Attorneys.com. I wanted to talk on a highly technical matter involving taxes and tax liens in the event that you file a Chapter 7 bankruptcy, or bankruptcy period. The issue becomes if the taxes are more than 3 years or older, that's a general rule, the taxes are dischargeable. But the issue becomes what actually happens to the lien that the IRS or the Georgia Department of Revenue files. First of all, tax liens are valid for only a certain period of time. Generally speaking, tax liens are valid for 10 years. If you file a bankruptcy case and the IRS has already filed a lien, and the taxes are more than 3 years old, the taxes themselves are discharged. But the issue becomes what happens to any assets, any of your property that you acquire after your bankruptcy case has been filed and after the bankruptcy case has been discharged or closed. Generally speaking, there has been no decision, believe it or not, by the United States Supreme Court on this topic. They have not said whether any of the assets that you acquire after the bankruptcy has been discharged can be used to satisfy the previous tax lien or attached to it. In fact, what happened is that in the Barbara Drake case, the court specifically ruled that the tax lien did not survive the bankruptcy. And so you would have to know what the law is in your jurisdiction to determine, I should say, whether the tax lien is actually going to be affected or affect any of your future property that you receive. And in fact, filing bankruptcy itself may stop the time that the tax lien could be valid for. So, but if you have, I know that this is a highly top technical area of law. If you have any questions about what happens to your taxes that are discharged and then any liens that are remaining from either the Georgia Department of Revenue or IRS, please call my office at 770-792-1000 or feel free, of course, to visit me at Chapter 7, the number 7, attorneys.com. Thank you.